The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got a market that's moving, not the way some people thought that it would, especially after today or yesterday. We are off 19.5 points on the S&P cash with 2.1 billion shares. And probably setting in, probably not going to be a lot of movement now to the FOMC meeting. Maybe we see a little downside. Down 20 points on the S&P cash at 2 o'clock. It is exceedingly, I would say exceedingly rare. I'm going to say that there was probably less than 25% of the time that you're down 20 points that you end up closing higher than the point at 2 o'clock. Normally, if you're down fairly significantly, the average thing is to sell off a little bit more. Doesn't mean that you close at the lows, which, we've gained back about we gained back about half of the downside we had earlier today. But my guess is that's the Pavlov's dog of we must buy every dip. Probably getting a little stale. I was very interested to hear what the fine guest from IBD on Tom's show last night said that the overwhelming amount of people that she talked to said, which was they're getting very tired of a market. Of course, IBD more for the investor than the trader. But I can see how it's been very tough. A lot of the professional money managers have way underperformed the S&P cash over the last year. And I can imagine a lot of people that are not thinking of trading see all these indexes and start thinking, wow, I should have made a lot more money than I did, or I lost money into this, and how could that be? But pretty violent market moves, if you believe it's a bull market. But it is very interesting. And we got a few things to comment about today before we get into charts. But I don't know. I see the idea that this market just can't move down and start seeing some of the movement. Let's get into, we got to move that over here for the moment. Let's move it over here for the moment. But, well, what can I say?
That it's all just a little bit of history repeating.
And it is a little bit of history repeating. On this day in 1938, after a protracted war with the U.S. Securities and Exchange Commission, the New York Stock Exchange finally recommends an internal reorganization that will install a board of governors, salaried independent president, and a specialized administrative staff. Basically, before then, it was a big club, and you had to buy a seat in the club, and nobody was really above anybody else. And if you had a grievance, it's take it to the curb and go dueling. There weren't any real ways to enforce trickery, subterfuge, and obfuscation. Basically, it was the wild, wild west. Basically, the New York Stock Exchange in 1934, when the Securities Act was passed, or 33, I think it was late 33, went into effect in 34, said that they would clean up Dodge, and never really did. And no one wanted to be king and basically have to quit trading because they thought it was a easy money. Of course, during the next 4 years, it was not. No one was willing to come back to the thing that had given them so much pain after so much pleasure. But yes, it was run like a private gentleman's club. It's become much more than that. Unspoken codes of honor and dishonor and pro bono president chosen from his fellow brokers. But it kind of interesting that it was 1938 before there was any real formal way of looking at a stock exchange. And it's what we have now. And it may not be a whole lot better than it was in 1938, but it is better. And most of it's still run like an old boys club. So I don't know if that much has changed since 1938. And what else can you say? But pretty much what we have was codified on this day in 1938. Now, we were talking a little bit about in the past about models. And I think this is probably an excellent time to bring up models in the marketplace. If anybody doesn't know what a model is, I'm not talking about a model airplane or anything like that. I'm talking about mathematical models for predicting things. And of course, we were told that there was a 90% chance that there would be about 2 to 3 feet of snow in New York City today. They canceled lots of flights. They canceled lots of stuff. They canceled all kinds of things based on a mathematical model. Now, if you listen to the show for any length of time, you'll know how big a fan I am of Nassim Taleb. He's not 100% right. He's right about 80% of the time. He's been sucked into some stupid things too. That I don't know. He probably won't admit that he is, but no one's 100% right. Let me put it that way. I'm certainly not. But pretty educated man. Unfortunately, probably a little bit too much Dr. House. Loves rubbing his nose in the nose of other people in the face of their own stupidity. But he wrote a really good piece, and I think one of his next books is going to be about it. He calls it the fourth quadrant, and that is statistics fall in about or fail about 25% of the time. And he goes through it in a thing. If you Google the fourth quadrant and Nassim Taleb, you'll find the beginning article of it. But he's been working on it for a while, and I think eventually when it comes out, it will probably be a big book. But basically, when statistics fail, and the idea that we can't even predict a snowstorm, 12, 14 hours in advance with any kind of precision, is a problem of something called chaos theory, which is not really named well. But on the opposite end, there are people that want us to spend $5-10 trillion worldwide to correct something that is based on a model. It is not based on science. And that's the biggest problem I have with the global warming crowd, other than the fact that they also fail on two parts. One, it's all based on models. There is no scientific test to see what's going to happen in 2, 3, 500 years. They also have one other problem, and that is that any decent thesis should be falsifiable, i.e., we should know when you are wrong, and we should take you to the woodshed when you are, and send you back to your mathematical models and your programming to figure out what was wrong. And somebody said, yes, he was blinded by science. But there is a very, very wise man, and I can't remember his name right now, who said that if you want to fool scientists, bring in a magician. Or if you want to check what they do, bring in a magician, because a lot of times life is, or at least history is complete with all kinds of things people believe that were not true. And people that actually believed it in good faith. But the idea that we can't predict a decent snowstorm and go from 3 feet to 4 inches gives you a good idea of what chaos theory is about. Anybody that tells you that they know for 100% certainty what a stock market's going to do also has the same problem. And chaos theory, if you delve into it, really should have been named something else. It should have been that some things will give you dramatically different results depending on the initial condition. And if you ever watched the Jurassic Park movie, they try to explain it. And he says, if I drop a drop of water on the back of my hand, which way it goes is hugely dependent on, where it lands on my hand. I can go this way, it can go that way. It's all really dependent on the initial condition. Now, if you dropped it in the middle of a plate and the plate's level and there's no wind going, you probably know for sure that probably the drop's not going anywhere. But you turn that plate over and it doesn't have a rim on it, it could go in a lot of different reasons and ways. And that is the problem with both stock market models, which I program my own. But I also know that once it starts to get out of some standard parameters, or the more you predict something like a 3-foot snow, the farther that you're going to be off on it. All I know are that conditions can be right. In fact, they've made what was it? All the guys from the tornado warnings and hurricane warning centers closed down after 14 years, just a year ago, because they basically figured out everything that they had been working on. They'd wasted 14 years of their life. Not probably a great day when you figure out that everything that you worked on for 14 years didn't hold water. And they did, so they closed down the, I think it was the Severe Storms Warning Center. But we can learn a lot from a snowstorm or people that tell us that they can project what's going to happen out 100 years from today. The answer is that you can give a lot of work to models, but at some point, and normally it's about 25% of the time, the statistics will fail you. Or in the case of global warming, maybe the input data is just wrong. They had to restate that. They were off by 30% from just the warming from 1850 to 1920. And there's, these input conditions are hugely variable out here. What I can tell you, though, is that if you have a storm coming and it's coming across the Atlantic and the water temperature is hugely warm, we know how these things work. And that is that extremely warm water will feed a storm and make it bigger. Do we know exactly where it's going to hit? The answer is probably not. We can probably give you a couple of 2 or 3 hour warning, and it's actually fairly decent. 18, 24 hours out, probably within 60, 80 miles maybe of where it's going to make landfall. But I think that if you've been around TFNN for a while, you've learned to embrace, or hopefully have learned to embrace, uncertainty, and to know that maybe there's just a better odds of one side going to the other. In the fact that I'm looking at this market, I think that we have basically an equal chance of going up about 30 or 40 points on the S&P cash from here, compared to going down about 200 points, down to about 1822 is where my target is on it. So I think I can lose a little or make a lot. We don't have to know about the snow. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're off 15 points on the S&P cash. So we're up another few points on the S&P cash. 2.2 billion shares. Of course, tonight after the bell, the big dog, Apple, is coming out with earnings. And, of course, tomorrow, FOMC meeting. And we'll have to see how this market closes out here. But I think there's an overabundance of bullishness out here. And I have a feeling that a lot of people are expecting something from the FOMC that they cannot deliver. But we shall see tomorrow. When we actually were talking about models, somebody in the den posted something about Lisa Lyon, who I don't know who she is, says all models represent garbage in, garbage out. And I would probably pick somebody that I actually knew that created the atomic bomb. In fact, he was responsible for most of the people in nuclear science at Caltech. And he said that the problem with computers isn't that they can't come up with the right answer. The problem is people play with them. And they come up with the answer that they want because they play with them, and they can get any real answer that they want out of them. And that is the problem with a program, and that is it reflects the beliefs of what someone has put into them. If you come and you're basically hired by somebody that's company depends on the price of Microsoft, you may be wanting to show a model that shows Microsoft stronger than it is. There are biases that come in, and that is it. But probably one of the smartest guys ever, whose lectures are all over YouTube, made some of the most important lectures on physics, and most of the scientists of the 60s, 70s, and 80s was responsible for that. But Mr. Feynman, if you ever want to check it out. Probably one of the smartest guys in the world, and you may remember that he was the guy that waved the seal around from the ill-fated Challenger accident, showing them what happened by putting it in a glass of water, that the seal hardened up and would not seal any longer. 3 or 6 months before his death, the last thing he wanted to do. But very interesting guy, but also very smart. But garbage in, garbage out is one way to look at it. More likely, I think that there's always a bias in any model, and it affects probably why those models are not correct. But if you don't want to be eaten by a giant dinosaur, you probably ought to understand chaos a little bit better, and that is probably ill-fated and ill-named, but it has a lot to do with initial conditions more than people think of chaos being just random. It's where it starts has a lot more to do with it ends up than maybe the mechanism that gets it there. Yeah, he did. Feynman said it was a joke after he got the Nobel Prize. But he was smart, and he was the guy that figured out that they needed 13 pounds of uranium to recreate at 80% purity to create a critical mass for the bomb, and he was credited, I think, for a lot of that. Nobody else really could figure it out. He had a pretty good brain for that. Anyway, we had a lot of stocks moving out here. Of course, Microsoft is the big one out here. And somebody was talking in the den before earnings, and they thought, it was only off $1. And I said, well, to me, this looked a little bit more problematic. Last week, we talked about their big rollout, but I think on Thursday, talked about Microsoft giving away Windows 10. And to me, that meant that there wasn't going to be that big upgrade cycle in the coming year, but I thought everybody figured that out already. But when they got into the conference call, I think they really had to explain to these dopes that are analysts that when we said we're giving it away for a year, we really mean we're giving it away for a year. It's going to be on a subscription basis after that. And overall, they intend that they think they can get 30 to 40% more over time than by selling it up front, just selling it new versions every year, having them automatically installed for a lower price. But instead of people getting fixed on Windows XP forever like they did in the past, they basically want to get you on the conveyor belt of always decent software and continually upgraded software instead of Windows XP that's, 15, 16 years old now? Anyway, not going to have a lot of Windows revenue for a year, and it's down on some fairly hard volume. We'll talk more about them when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And another private mail. You can always email me at path@tfnn.com and or post a message in the den and or call at 877-927-6648. But somebody was in here about something about Fibonacci patterns. I'm not real familiar with what he said in the thing, other than the fact that Fibonacci is probably the most over and underused thing out there in mathematics. And we did an entire show on it maybe 3 months ago. But the most interesting thing to me was that a school of math in, I think it was, it's in Washington somewhere. I can't remember if it's in Seattle. Anyway, one of the big and brightest mathematicians' schools built a math center. And it was supposed to be a Fibonacci spiral for a staircase. And it came out that it was actually just a logarithmic spiral. And they were rather red-faced and had to rebuild the building. So a lot of times what people think are Fibonacci's are a little tougher. Anyway, I'll post that after the show. I'll have to go look up the reference for the schools, but I remember it was rather interesting. What else do we have going on? Somebody mentioned Chanos also. Of course, he had a big win today in Caterpillar. Jim Chanos is one of the big shorters, got Enron, got most of the other big companies that had fraud on their books. And very interesting to see this was down. In fact, a lot of people gave him a big bad time because I think he'd been short this thing for a year. I think he was actually short in this thing, maybe going back to May of last year. And a lot of people were giving him a hard time when this thing came back up to 107 just recently out here in November. He was taking a grilling, but he seems to shed a lot of what people say off of him, like water off a duck. But someone was saying, someone was bringing him back up again today. And of course, pretty good guy, pretty sharp guy, and kind of a no BS kind of guy. But I brought this up a week or two ago when he was on, and I'm just going to play this again.
Buybacks individually can be a great thing. However, if everybody is doing it, and then that is really the case in the numbers we're seeing, if you think about it, buybacks, if you're a corporate CEO or CFO, you can invest back in your business or you can buy back your stock at what you think are cheap prices. If everybody's buying back their stock, what they're telling you is they're buying the stock market.
Then he goes on.
That's all they're doing. They're hoping to get a return, a stock market return, which may be high single digits over the long period of time. Corporate America has returns on capital double that, 15 to 20% pre-tax. So by making the decision on the margin to buy back their stock, they're telling you a few things. They're telling you their profits are not sustainable at these levels. They're happy to take 9% instead of reinvest in another chip plant or another.
And that was basically it. It was about a week or 10 days ago, but we've seen yet another mass of share buybacks in companies that I thought was very interesting last night after the earnings call. But what can you say? Anyway, Caterpillar down, huge volume. And if you take this a chart back, basically this thing is down at the last big level of support. We're going to start really seeing this thing blow back down. Basically 78.25 goes back to July 12th, 2012. And we're just a little less than a buck above that now for the low of the day. But you already have twice the volume you need to go through that low. The next one is the October 4th low of 2011. That's at 67.54. And then if that fails, you're probably headed back to the 65 range and most likely maybe as low as $50. But of course, we don't know that for yet. The energy on this leg down shows you a great deal off this July 16th high from last year. But it's been a wild ride, but I think he's done fairly well on it. ABX Barrick Gold, one of the stocks being mentioned out here today. Nice little pop. Of course, a little bit of fear trade with this market being back, and it is problematic. What else do we have? I'm not going to say it does much up here. We're basically in Barrick Gold at this at a real level of resistance that goes back into November. So you're going to need probably a little bit more juice and maybe a little bit more time for some of these gold stocks to break higher if that's what you're looking for. COM is a CommScope Holdings. Trying to remember what the news on this was. Let me look up. Looks like it's going to be bought out, and it would be interesting. Can you look at UGA? What is UGA? United States Gasoline. Oh, that's what it is. Oh, yeah. ETF. Yeah, the big problem I have with doing anything on this is that there's just not enough volume. Yeah, 80,000, 25,000 shares. I don't think there's a whole lot you can do with it other than take it back and say that maybe, you've blown through that $30 level from August 25th, 2010. You bounce back up a little bit, but see if there's anything else out here even longer. My word, UGA, and I don't know about the contango in this thing, but you have 2750 as a major low, July 13th, 2009. And then the next major low takes you to $16.10 from December 26th, 2008. So, what else can you say? To DO, which is a little bit of offshore drilling, has gotten a little bit of a dead cat bounce out here, and it is up a little bit stronger today. Not a lot of volume, but I don't know what else you can say. Obama may allow drilling off the Atlantic coast. I wonder if that's real or not. Won't let a pipeline go through, but will let offshore drilling? I don't think so. One of those two are wrong. And since I know he won't let the pipeline go through, my guess is that this Atlantic coast thing is probably not real. But you get a little bounce out of it. Not a lot of volume. Probably a lot of naysayers like me out here. FCX missed Q4 consensus EPS by 10 cents, and it's back down to the lows. And I think Andy Heck probably talked more about copper and gold tonight, but I think there's a lot more copper and FCX than anything else. But down now, it is hitting its previous low from January 14th that had 60 million shares with 26 million shares. So we may be finding a temporary bottom in FCX. In fact, Andy, I asked him about this stock last week, and it was Horsehead Holdings. It is a zinc company, and the chart actually doesn't look that bad, other than the fact you had this huge volume pop after I asked him, and it broke back down. So anyway, he's got an article on Seeking Alpha about zinc, and he kind of likes it. Anyway, you'd need this thing to close back above the 1388 level, which it's doing, and volume remained slight. You have a fairly decent risk reward. But when I look at a lot of things like SCO and a lot of the other companies out here, maybe something that's a little less well known like zinc may have a better play. And I think Andy's article said that, but I'm sure he'll talk about it tonight, maybe on Tom's show too. But he kind of likes this Horsehead holding zinc. And I think it's because the name is Horsehead Mine or something. But I don't think I'd be talking about a horsehead in my bed. But I think Andy talks about it in his article. Graco, GGG, another stock out here making news today. Reported earnings of 80 cents per share, 3 cents worse than Capital IQ of 83 cents. And missed on revenues a little bit out here and down fairly strong. This thing has been in a long consolidation. And you basically need to break out somewhere around that $65, $66 level to the downside next time with about 1 million shares. And you're going to be back down to the $53 level, which is the April 19th, 2013 low. There's a couple of gaps down here below that could be filled too. I'm trying to remember what Graco does. Again, you can email me at path@tfnn.com, and or you can post a message in the den like Dr. DTO did on UGA, and I'll try to cover it. Graco manufactures and markets equipment to pump, meter, mix, and dispense various fluids and coatings worldwide. Company operates through 3 segments: industrial, contractor, and lubrication. So not looking good for these guys, but what would scare me more than anything is this massively long consolidation between just under $80 and 67. If you break either way on this thing, you're going to have a huge move. My guess is the downsides have had a lot of volume, and you've got a big kind of downside at 65.18. That's probably where this thing is headed. Then you will check it out. I've been rather bearish on Corning. I was not shorted. I was shorted a couple times. We made money both times in the Tech Insider on it. I kind of got off of it because they started getting contracts for things other than Gorilla Glass. And they had some good volume, but I kind of expected that because of the way Apple had been selling phones. And of course, they, after the fiasco with Sapphire, Corning kind of had Apple over the barrel for pricing on Gorilla Glass screens for it. I suspect that we're going to see this really tail off in the next years. And this thing may go 3 months up here at these higher prices. But my guess is when we see Apple start talking about satisfying the initial demands for the new iPhone models and abroad, that's going to be filled up fairly quick. And it's going to be what they call the run rate after the initial surge that's going to be important. And the question is whether Corning can handle that, since a lot of people have figured out how to make their glass. Most of the other phones in China being sold have a Gorilla Glass-like display. It's just that they don't pay them any royalties, I don't think, whatsoever. As most things in China. If you're anywhere outside the border, you're most likely not going to get your royalties. But the question is, how much of that are they actually going to get? How much of their earnings was because they were able to get a little better pricing out of Apple after the Sapphire fiasco? So I stayed out of it here. But what I think this is doing is probably setting up a better move as people move out of Corning's Gorilla Glass and into other kinds of displays that are naturally stronger than Gorilla Glass, and there are many coming out on the market fairly soon. Newmont Mining had some news out here. Let's see what else that we have. I'm not trying to remember. Not a lot of movement. Do we have anything else out here? Yeah. This mostly, I think, the movement of the market at all. Polaris Industries. A lot of people look like they're out there on these four-wheelers. This thing had a pretty wicked pop out here, maybe on the move in gasoline, since I think everything that they sell has gasoline next to it. What is this? PII. Take a look. I've got it on my list of stuff. Beat 4Q consensus estimate by 4 seats. Beat on revenues and guidance and guided up. EPS is below consensus revenue in line. So I think there were a lot of people short this thing, and maybe just short just a little bit too early. Maybe the bad news from the dollar is coming in the future. This thing came right back up to where it gapped down on fairly decent volume, but volume is better today, which means that you might see this thing get back up to 155, but watch for it. Now, here's the chart of the day. And that is Packaging Corporation of America. If you want to see where semis are going, I always say look at Altera and look at Xilinx. If you want to see where the future of America is going, look at Packaging Corporation of America and a few other of these packaging companies that sell all the packaging that go into all the goods that are produced here in the United States. This thing's off rather massively on huge volume. My guess is it's going to go back down to $57.06, which is the low from October 15th of last year. This thing's had a nice run, but kind of tough to see this thing come down this hard and be bullish on manufacturing, which is, of course, everything from dog food. They make all the packaging and labels and a lot of that kind of stuff. We'll be back and talk more about them in the short future.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, got a few stocks we want to look at before the end of the day. Of course, it's all about earnings tonight. We've got some biotechs after the bell. Of course, Apple. And, of course, with Intel and Microsoft creating a giant sucking sound out there today in the semis and in the NASDAQ 100. There's only a couple of stocks left that basically the top 6 stocks in the NASDAQ 100 are 60% of the entire NASDAQ 100, and we've wiped out all of them except Gilead and Apple today. So we've got basically 2 stocks that are going to be holding up the NASDAQ 100 in the coming months. I can't see a lot of people figuring out what's going on. Microsoft itself needs to hold 43. Doesn't hold 43, probably going to hit about $40. And I still like the company, and I wouldn't be shorting it, but it is... I think it's something that you can probably let it sit for 6 months or 9 months until they get ready to start shipping their product. And I think they're going to be offering some ways of getting some income from a new version of the operating system. But if you missed it earlier in the show, if you have Windows 7 or later, Windows 7, Windows 8, it's going to be a free upgrade for the first year, and then you're going to be on a subscription after that. I don't know what the prices are. I don't think they've announced them, but it's probably going to be something like $30 a year, and they're going to be offering a update service where the operating system tends to update almost automatically once a week. with new features. There's not going to be a different version of Windows 10 for quite a few years, but there are going to be constant updates. And if you don't fork over the 30 or 40 bucks for the year, you're not going to get those updates. And so that'll be that. Anyway, we're talking about Packaging Corporation of America. And it was rather interesting to see this, but, you know, a lot of these stocks came back a little bit. In fact, where we're sitting right now, what are we at? 2038 on the S&P cash. We're off 18 points. My guess is that we're probably, this is, 2038 is probably a fairly important number if we close above or below it today. But my guess is that we're going to have some fairly light volume tomorrow. When we look at options, it is, I'm going to run out of time here. I don't have enough time to get it. But the options on Apple are quite interesting. Basically, they think that it's going to not go anywhere, 110 bucks. So it's going to be very interesting to see whatever Apple says and whether or not Apple just sits there. Because between it and a few of the biotechs, that's the last thing holding up the tech sector from sliding into the ocean. But it is going to be interesting for the earnings. Anyway, we were talking about a couple of these companies, PLD, which is Prologic. Nice little breakout here today on volume. PLD is the symbol on that. The one I thought was more interesting was Plantronics. If you don't know this company, they are the ones that make headsets for most of the call centers. And with the advent of a great deal of changes in laws and phone calls and the internet and chat services, this company may be in real big trouble. Certainly it blew down to 44.49. I don't know if that's a bad tick or it actually got down there. It is off on volume today, and looks like it could, supports probably somewhere around 41 bucks on this thing. So I imagine at 47, it's going to have a while to meander all the way back down. But just every one of these companies out here is talking about the dollar. We've been talking about it, I think, with Tom O'Brien many times on the Friday show. How can these companies that sell internationally have any chance of higher prices? And it's tough for me to see. Anyway, we're going to see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. See you tomorrow.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.